good morning, everybody, and happy Tuesday. Serge Berger here from thesteadytrader.com. We're going to get started in just a minute. Thanks for being here. If you guys have any questions along the way, as always, please do let us know. We're first going to go through some of the more important charts on our screens here and things, and then if we have some time left for a couple of other questions, by all means, we will go through those as well. So hang tight. We'll get started in just a second here. All right, perfect. Let's get started. Good morning, everybody. Serge Berger here from thesteadytrader.com. If you're here for the first time, what we are going to do here, we're going to spend the next 10 or so minutes, maybe 15 minutes, going through some of the more important things in our notepad. And we would encourage you to do something similar. Having a notepad for the markets is important to do. So that's typically a good exercise to conduct. If you are here for the first time, please make sure you subscribe to the channel. If you haven't done so already, it really helps you out to be able to get updated in real time when we go live with market analysis. And also, please give us a thumbs up like that helps us be able to continue to do this morning show. All right, let's start off with the S&P 500. Then we're going to look at the JP Morgan. We're going to look at the VIX. And then we're going to spend quite a bit of time on gold miners, silver, and copper, sort of in that order. So let's get started and see if we can do this in about 10 minutes or so here this morning. What you're looking at here on your screen is something that we talked about yesterday when I showed you guys a longer-term chart of the S&P 500 through the lens of a weekly time frame. And you can see that we continue to struggle at this upper end of the long-term range. This is a long-term chart. This chart goes back to the 1960s, but you can see, kind of where we're at here in the bigger sense. Now, if you zoom in a bit closer, we've now had a 10% corrective move in the S&P 500 from peak to trough. That's just taking literally January's peak down to the trough a few days ago. And I think we're due for an oversold bounce. I don't know how big that is going to be and how long, but I think one thing that's interesting to note is that unless we head into more of a recessionary environment, a 10% corrective move is kind of about what you tend to see. So we would have to see the economy slow down quite a bit from here in order for us to get another, let's say, 20%. Having said that, and this is where there's a big exception here, what I keep coming back to is this huge market cap concentration in a few stocks. You guys know them, the Max 7s. And so when you have that kind of a market cap concentration, you can have a lot more unintended consequences take place, which is why I keep making such a big deal about that one thing. Because it takes very little, and then we live in an algorithm world. It takes very little for some selling, which otherwise would be orderly, to then turn into much more selling, and then destructs a lot of wealth. We have record amount of people involved in the stock market, not only in the U.S. but globally, all in the same names for the most part, and so you can have that wealth destruction, which then gets people to spend less, which then in turn can turn into a recession, right? So it becomes a self-reinforcing mechanism, sort of a feedback loop. And I think that's something that when I talk to analysts of all types, that's one thing they're not really thinking about too much, at least in my humble view, is the positioning problem. Some of them are very much focused on that, but the majority, if you sort of run-of-the-mill Wall Street analysts that you'll hear on CNBC, they're not so much concerned with that, and for good reason. It's just not part of their models. Hasn't historically been that important, but that does not mean that it can't become important at some point. So I would encourage everyone to be mindful of this. Then let's have a look at the VIX. And this is interesting because we are heading into the Fed tomorrow, and we do expect to see some hedges to come off because once we have this known unknown event tomorrow, meaning we know the date, we don't know the outcome, or don't know what the market's going to react like. Once that's passed tomorrow, you're going to see a lot of hedges come off, which then means that the market, in this case the S&P 500, all else being equal, could have a somewhat easier time, and I stress somewhat easier time, all else being equal, to bounce a bit from an oversold perspective. Having said that, today we have potentially some more headlines coming out of Russia, Ukraine, potential ceasefire deal, something there. So that could be a trigger as well. Again, very fluid situation, but what we're looking at here is a market that is still unable to bounce this morning. If you guys were up, depending on how early you were up, the S&P was rallying, and then there were some headlines coming out of Russia that Putin apparently wants a complete end of U.S. weapon delivery to Ukraine, and I think the equity market hasn't liked that. What has liked it is the price of gold, and we're going to get back to gold here in just a second. Lastly, just quickly on a single name stock basis, JP Morgan continues to be at a very interesting point as far as I'm concerned. I still think there's an oversold bounce here that could go further, but also we have a very clear line in the sand. I'm going to say somewhere around 225, give or take a few bucks. If and when we were to snap those levels, that would be probably lead to the next leg low, where you're probably looking at the low 200s at that point, and maybe even into the high 100s at that point. So watch that. There's some pretty clear levels. JP Morgan is one of those stocks that everyone focuses on outside of the tech space, of course. So that's S&P update, VIX positioning, hedges, and JP Morgan, all in like the first 4 minutes. Hopefully that's helpful for you guys, what we're giving you here. Next, let's move on to gold and gold miners. So here we have to do a little bit of perspective, and we're going to continue right after this. On the back of this, we're going to go into our weekly Market Rover members session, where we're going to go into more detail on this, but I want to just give you a little bit of an idea how much of a trend-following trade gold continues to be. And you can see we did receive that first green background color appear in January of last year, so that's about 13, 14 months ago. And gold continues to power higher. It's up another 1.25% this morning, so it's up just about 50% since then. At the same time, what we've seen a bit more is this is straight from the Market Rover. So if you don't have the Market Rover, please go get it. It's crucial to have certainly in this environment now. Actually always, but even more so now because we have critical shifts taking place, and I think a lot of people are missing all these shifts. Gold mining stocks, gold miners this morning pre-market, I'm looking at the GDX here, are up about, let's say another 1.9, actually 2% this morning. It's actually reaching our profit target number 2 at around 45.30 or so. So we did receive a new swing trading buy signal from the Market Rover the other day. I did mention it also in the Trade Ops chat room. Hopefully you guys are enjoying that as well. So that's taking place. Silver as well, up another, I think, couple of percent this morning. That too is reaching some of our initial profit targets right there. This is all straight from the Market Rover. So a lot of really good things happening there. And that gets us to the last sort of major point that I'm going to, we're actually going to release something, I believe, next week, where we're going to hold everyone's hand very specifically in being, hopefully have, a few 10x opportunities in these materials. I think silver has way higher to go. I think gold has way higher to go over the course of years. And we think that copper is about to go much, much, much higher as well. And just going to quickly focus on the copper chart. I'll show it to you here through the lens of CPER. This is an ETF. Obviously, copper will trail copper futures. The ETF will trail copper futures, of course. But you're seeing just a very, very, very interesting setup here that has a lot of potential. I mean, again, some of these trades are 10x, 20x, depending on what they are, and they require a very clear focus on them. We're going to release something, again, I think next week or the week after, how to really specifically hone in on this opportunity, because the tailwinds in this space, whether it's gold or silver or in particular copper and even uranium and things like that, the story is so powerful, both fundamentally and structurally. Fundamentally meaning there's a lot of demand, and structurally there's a huge supply and demand imbalance in terms of what we need for electricity, i.e. what we need for materials, even just for AI, right? And so you might have AI stocks go down because they were pumped and everyone was long them. But I think on the materials side and on the energy side, it's actually the exact opposite. So that's what's going on there. And then last but not least, since we're talking about copper, I do want to quickly mention COPX, which is copper mining stocks. They are firing off a first momentum trade this morning for us. If you are a TST Trender user, please make sure you check your email this morning or come into the chat and check. You will receive a trade alert in COPX with a specific profit target and a stop loss, because momentum is now actually, at least for the short term, bullish, and we think that is likely going to continue going forward as momentum continues to go more into these names. So really, really significant shifts taking place here this year already. And remember, we called this the year of the trader back in November. I think very few people really took notice or really cared to hear that from us. Now that they're seeing that their Max 7 stocks are stagnating, they've already been stagnating since summer last year, by the way, and they're seeing a totally different market composure. I think people are starting to wake up and realize that buy the S&P 500 and let it sit for a year and make 50% era is probably over, and so we need to be more aware of what's going on. So hopefully this is helpful, folks. We'll see you guys over in the Inner Circle / Market Rover member session here in about 7 minutes or so, and then followed right after that we'll be in the trade rooms, and then I believe at 11 Eastern today we're having an ETF Salo Pro member session where we're going to go quite detailed into all of this even further on the opportunities here. So, the question really from a trading and investing perspective is, does one feel comfortable owning the S&P 500, which might go sideways for 5 to 10 years or maybe up 5% a year on average? And does that still fit one's goals? I know most people want to make 15% a year, which is historically not really realistic. And does one risk at a crucial point in time, whether one is 30 years old or 7 years old, risk not realizing when the market is screaming some very, very clear messages? So looking forward to seeing you guys here throughout the day in the various sessions and trade ideas. And we'll see you back here tomorrow morning as well at the same time, 9 o'clock Eastern for Wednesday.